Welcome back to the Brent Bruce Daily, where each day we take a look and see where home loan interest rates really are, what is making the move, and what to expect for the future. Today is April the 19th, 2023. It is now 3:58 p.m. Central Time. The bond market is just about closed. Mortgage-backed securities are just about done trading for the day. Today, they have been fighting back pretty much all day. Earlier this morning, there was what's called some Fed speak, and that's when you hear like interviews or comments from some of the Federal Reserve board members. And some of one in particular board member mentioned that he thought that they should continue to increase the federal funds rate another 0.75% before stopping, which is just way too far. Unfortunately, the Fed tends to make their decisions by reading stale reports. They read reports about where the economy is, but it's as though those reports came from San Francisco on like a horse and buggy and made it to New York like 6 weeks later. And they're reading those reports as though it just happened today and then making those decisions. And unfortunately, that's what we have to deal with sometimes. So hopefully they get wise, don't continue to raise the federal funds rate. Maybe he's an outlier. We should leave the federal funds rate where it is now, let it do its work in the economy, and begin to back it off sometime in 2024. Now, unfortunately, I have not gotten a call about joining the Federal Reserve Board. So we're going to have to see what they do. They haven't been listening to me at all lately. So let's take a look and see where we are. We're currently down 3 basis points on our mortgage backed security. We're up 2 on the 10-year Treasury. Here we are on our charts here. I'm going to show you something really interesting in just a moment that I think you'll like it. I mean, maybe you'll hate it, but we're currently, you can see down below this ceiling of resistance. Here's our floor of support all the way down here at that 99.845. So we do have some potential room we could fall. But again, it was nice to see us climbing back throughout the day. Let's take a look and see. Where were we on our charts back when home loan interest rates on a 30-year fixed Brent Bruce daily was 2.75? 2.875 with no points on a 30-year fixed mortgage. Where were we on those charts? Let's take a look. So what I'm going to do is I'm going to go over here and I'm going to go year to date, and then I'm going to have to go all the way to longer time frames. So we're going to push this chart way out. And you can see it's going to take a minute to calculate something like that. And again, thanks to the team over at MBS Highway, who we get all of our start charts from. Here we were. Okay, so on our charts, we were, let's say this was about the peak right here. So that is what? 112.39 over there on your right side in the black box. October the 8th, 2021. Let's just say that was the best day of our cycle. We went all the way down at one point to where we were at about 97. All right. So understand, we are talking about like almost 1,600 basis points we have dropped over this downtrend. That is because of inflation. This is because of the effects of inflation. All right. So you can see why it was so important for the Federal Reserve to step in, begin to turn things around. You can see that hopefully this is the bottom and that we have now crept back up and we start bouncing around as we begin to head back up. Now, here's the thing. Do you think that we're going to be in this range here, the 2.875, the 3.5? Maybe. I mean, we might, but that is not normal. So continue to make sure that people understand that a normal home loan is not 3.5%. When we're at 4.5 or we're at 5, that does not mean home loan interest rates are high. That is a more normalized market. And I think people are starting to get that. They're starting to understand that. But hey, right now, it's still something that we're trying to adjust to. So let's take a look and see where we're at on our actual interest rates. Running over here, run the scenario for the Brent Bruce Daily, which is our very well qualified 30-year fixed conventional home loan. Make sure that you like, subscribe, and share, and hit that little notification bell up in the corner so that you do get these notifications when I put them out, because this is relevant and current. And you are looking at multiple banks that I am able to access and I work with contractually for all kinds of different products. Okay, so that is because I am a mortgage broker. If you are working with a mortgage banker, they have one bank, one product, pretty much. That's why you should be working with a broker because we're able to shop and find the best rates. So right now, 11 Mortgage is giving us the best rate today, 6.875%, a little bit of a credit of $965. If I open this up, we always like to take a look and see what that 5.999 is going to cost us. So 5.999 right now with this bank is costing 1.925 points. We talked a little bit about what that is yesterday, almost 2% of the loan amount to get to the 5.999. Let's open up United Wholesale because we always like to take a look and see where they are. 5.999 is costing 1.477. So look, they're more expensive for a 0-point loan. They're at 6.999 if you don't want to pay anything. But if you are willing to buy down your rate a little bit, they become the better bank. Again, this is why you work with brokers because we can shop for all these different scenarios. It's not just one product. All right. So you can see how that begins to make a real difference. That's a 0.5% lower, but yet it looked as though they were more expensive. You got to look into this stuff a little bit further. All right. So that's where we are right now. I'm going to open up my scenario here for compliance purposes. There you go. Once again, I will continue to keep you posted. Make sure that you like, subscribe, share, and let me know your comments. If you think that I'm crazy, if you think that I'm on the right track, I'll get back to you tomorrow.